Welcome to the deep dive. Okay, picture this. The iconic skyscrapers of Wall Street. The symbols of global finance. But beneath all that steel and glass, there's this uh, invisible force at play, a current of change that's, well, silently reshaping strategy, reshaping competitive edges. Today, we're taking a deep dive into that force, artificial intelligence, and really how it's fundamentally transforming the financial sector.
It really is. And look, this isn't just about simple automation. I mean, AI has been doing bits of that for years now. We're talking about a radical reshaping, an industry built, traditionally on human expertise, intuition, gut feelings even, personal relationships. It's a profound shift. How money moves, how markets operate.
Exactly. And our mission today is to, well, pull out the most important nuggets, the key insights from some sources discussing this huge shift. You're going to get a shortcut to understanding the key changes, the massive financial gains, and some pretty surprising innovations AI is bringing to finance. We're drawing on some compelling material like excerpts from AI and finance, reshaping Wall Street and beyond, which gives a really detailed look. So, yeah, let's get into it.
Okay. So what's kind of striking is that AI's first big push into finance felt almost predictable. It was about automating the mundane stuff, the repetitive tasks. Think back office operations, reconciling endless transactions, basic compliance monitoring, that kind of thing. That stuff was, well, ripe for efficiency gains, no doubt about it.
Right, okay. So tackling those foundational tasks first makes sense. But where did AI make its next really big splash on Wall Street? Because it wasn't just about making things run a bit smoother behind the scenes, was it? It had to be more fundamental than that.
Absolutely not. It was a wave that, hit the trading floor itself hard. It fundamentally altered how decisions get made, how trades get executed. I mean, look at Goldman Sachs, a name totally synonymous with human traders, right? At one point, they let go, I think it was nearly 600 of them, 600 traders, and they essentially replaced that human expertise with highly skilled computer engineers, people building these really sophisticated AI systems.
600, wow. That's a dramatic pivot. So what does that kind of shift really mean for how trading works day to day
Yeah.
on a basic level? But it sounds like it's about more than just doing things faster.
Oh, it's a complete reimagining. I mean, these new algorithms, they can execute complex trading strategies in microseconds. Just think about that, reacting to tiny market shifts at speeds no human brain can even comprehend, let alone match. This isn't just like incremental improvement. It's a completely different scale of responsiveness. It changes the very nature of market dynamics.
Microseconds.
And then if you scale that kind of capability up across the industry, the potential financial impact is just staggering. There was a Business Insider report estimating that global banks could save up to, what was it, $447 billion by 2025, just through AI applications. For an industry that's always, battling thin margins, that's not just a nice to have. It's a fundamental change in potential profitability, a huge competitive edge.
447 billion. That is, an intoxicating promise for the industry.
Yeah.
And it's not just speed and cutting costs, like you said. Look at JP Morgan Chase's contract intelligence platform, CCOIN they call it. This AI system can interpret millions of loan agreements. Just think about the scale. It apparently trims thousands of hours of legal and loan officer work down to mere seconds. That kind of rapid analysis capability, it was just unimaginable a few years back.
Exactly. Seconds. And building on that first wave, that automation piece, AI's influence then sort of shifted gears again. It moved beyond just internal efficiencies, making the bank run better. It started moving towards offering genuinely bespoke, customer-centric services tailored to the individual. And this is a transformation that, frankly, was pretty unimagined in finance's more conventional corners.
Okay, so instead of just making the bank's insides run smoother, it's now reaching out directly to you, the customer. Is that the idea?
So we're seeing machine learning algorithms digging through enormous amounts of consumer data, identifying patterns, predicting behaviors, all to, craft personalized banking experiences, recommend investments, and crucially, I guess, detect fraud with much better accuracy. Precisely. That fraud detection piece is huge. A great example is HSBC. Back in 2021, they rolled out these AI-based systems, and they managed to reduce their credit card fraud losses by 15%. 15! That's a really significant saving, obviously, for the bank's bottom line. But it's also massive protection for customers, right? Shielding you from financial harm. It just shows how AI moves from being purely internal efficiency to providing direct customer benefit.
15% is substantial.
Yeah.
Okay, so we've seen efficiency, we've seen personalization and protection, but with all these powerful algorithms making decisions, what about the tricky side? Yeah. The ethical questions.
Well, yes, that's absolutely crucial. And it's a major area of concern and ongoing work as AI gets more embedded, especially in customer-facing decisions like loan applications or credit limits. Questions about fairness and bias come right to the forefront. A big part of the problem is that, well, the opaqueness of some machine learning models. It can be really hard to understand why an algorithm made a specific judgment.
Right, the black box problem. You
Yeah.
don't always know the logic inside. Is there a specific instance where this became a real public issue?
There is. A pretty high-profile cautionary tale involves the Apple Card launch back in 2019. The card, which used algorithmic assessments for credit limits developed with Goldman Sachs, actually faced scrutiny because it appeared, based on anecdotal reports at first, to offer lower credit limits to women than to men, even within the same household or with similar credit profiles.
Oof. Yeah, I remember that causing quite a stir.
Exactly. It became a stark demonstration of the potential peril of bias, whether that bias was intentional or, more likely, unintentionally baked into the data or the algorithm itself. Machines learn from the data we give them, and if that data reflects historical biases, well, the machine can perpetuate or even amplify them.
Which really throws up that critical question for you listening.
Yeah.
How do we ensure fairness when the machines are making these crucial financial decisions? It's a tough one.
It really is, and it's something regulators in the industry are grappling with intensely.
So amid all this tech advancement and these ethical minefields, how are the leaders, the decision makers on Wall Street, thinking about strategy? Are they all in?
Well, perspectives vary, but many influential figures see AI as absolutely central to the future. Take Larry Fink of BlackRock, a huge player. He's been quoted calling AI indispensable. He talks about it redefining jobs, yes, but also amplifying human capacities, augmenting our intuition. So that paints a picture of maybe humans and AI working together in harmony rather than just replacement.
Augmenting intuition. That's an interesting framing. Not just replacing, but enhancing human skills.
Exactly. And you see this strategic shift reflected in the investment landscape itself. It's really undergoing a metamorphosis. Venture capital is just pouring into innovative AI startups, companies trying to fundamentally rethink how finance works using this tech. Think about Robinhood, for instance. They used algorithms and a simplified interface.
Right, they completely changed the game for retail investors, didn't they? Made trading accessible.
They absolutely did. They democratized trading through these simplified, algorithm-driven platforms. And get this, Robinhood managed to amass over 13 million users before it even went public. 13 million.
That's extraordinary.
It is. And it was achieved largely by leveraging AI and smart design to just slash the traditional barriers to entry for individual investors. They minimized the friction, made it easy, almost game-like in some ways. It opened up the market to millions who felt excluded before.
So it's changing who participates in the market as well as how the institutions operate?
Precisely. And look, this whole journey, it feels like it's really just beginning. Wall Street is racing, truly racing, to embed AI deeper and deeper into its core operations, its very ethos. Competitive dynamics are shifting constantly. Firms have to rethink their core strategies, how they manage risk in this new environment, how they engage with customers who now expect that personalization. We're genuinely seeing technology usher in a completely new era for finance. Not just, incremental tweaks, but potentially novel business models. Totally reimagine roles for finance professionals. It's a massive transformation underway.
Okay, so let's try and bring this together. What does this all mean for you, listening? The core message seems clear. AI is fundamentally changing finance, no question. It's bringing this unprecedented efficiency, these incredibly personalized services we talked about. But, and it's a big but, it also raises these critical ethical questions about bias, about fairness. It's this blend, isn't it? Astonishing progress mixed with really significant challenges.
That sums it up well. And whether you're, deep in the financial world yourself, or maybe just curious about how your money is managed or how these big systems work, understanding this shift is becoming pretty crucial because it touches everything. How money is managed day to day, how financial services are delivered to you, even how things like fairness and access are maintained in this increasingly algorithm-driven world.
So as Wall Street goes all in, really embedding AI into its core, we're left with this powerful question, aren't we? Is this new era for finance destined to deliver the kind of utopia of efficiency and access it seems to promise? Or will it sow unforeseen disruptions, create new kinds of risk, exacerbate inequalities? It feels like this tightrope walk between driving innovation forward and managing the potential downsides, governing it properly. Yeah. That's really the defining challenge, the substantive question as AI's dominion rises in finance, something to really ponder.